I've helped more than 100 companies pinpoint what is actually driving retention over the long term and how to reduce churn. In this video, I'll show you how to do the same using Mixpanel's retention report, even if you never used this report before, to uncover the retention levers in your product so you can unlock growth. Retention analysis starts by understanding your foundational retention formula, which is very likely different from other products. Now, they have some demo project data we'll be using for our video today, and they have this AI project, which I think is kind of interesting. Effectively, you can imagine something similar to like a ChatGPT. You may be interacting with the AI model through an API, but you can see that, we're sending prompts, we're launching the AI, we're making purchases, we're dismissing the AI. So that's kind of like the model of data we're working with. So we start by creating our foundational formula. So we have to take two events, in this case, a starting event, and then the actual retention event. So let's keep simple. Let's use sign up, and then let's imagine that we want to send a prompt. So what we're saying here is we want to look at all the users who signed up over some time period, and then how many of those users came back and sent an AI prompt. This is a very common form of retention. It's typically the kind of retention people talk about when they say, our D7, our day 7 retention is 50%. It just simply means that 7 days after signing up, users are still doing some kind of core action. Now, some things for you to know here in the report. Some things are quite similar to the rest of Mixpanel. So we do have some date range here. In this case, we're looking at the last 30 days. We can look at months, custom day ranges. We have a breakdown if you want to do this by day, week, or month, or quarter, like technically minute and hour. This is where you start to think about the retention frequency of your product. If you imagine a gaming app, they may have a daily retention frequency goal. They want users to engage every day. Or think about Spotify. You want users to engage every day. Other products, you're not going to get that. If you think of like tax software, people are going to use that once a year at a very specific time. So whatever your frequency is, you want to then outline it here. And again, you kind of limit it to the specific buckets, but generally they work well for most products, either a daily, a weekly, or a monthly frequency. Let's say weekly for now. Let's imagine someone who's actually using an AI product, ideally engaging with the AI product once or twice per week. That's our goal here for retention. From that perspective, 30 days doesn't quite make sense. It's only 4 weeks. So we need to move to at least 3 months, maybe even 6 months to get a little bit more data. We also have a few other retention charts here. So we do have the retention curve, which kind of shows what the retention is at, week 1, week 2, week 3. We can show it as a line. You can see the dates of each week and the retention or the average retention of each week. And of course, we can have a metric. This kind of becomes important if you're building a dashboard and you want to display retention in different ways. You may want to have a single number. So people say, hey, here's a retention rate for our sign up to our core action. Boom, a metric. Here's the line. Here's the retention curve, whatever it is. Retention curve is probably the most common because you're starting with a very high retention, basically from, week 0. And then you can see if the retention is dropping as time goes on, which typically it is. Below, we're going to have the cohort analysis table where we break down the data by dates. So in this case, right, we have 3 months of data. We look at the different weeks, and then we can see that, for the week of February 24, 2025, there were 363 users who signed up, that is, who performed event number 1. And then what percentage of those users then came back and did the second event, AI prompt sent, in week 2, week 3, week 4, and so forth. You can see the table kind of goes on. For the newer weeks, as we can expect, or whenever we have data here, we may not have enough data to actually show it. So in this case, the May data, you can see this is actually a little bit delayed in the way the data is reported. Then we don't necessarily have enough data. So this no color boxes are weeks that are basically in progress at the moment versus the color boxes are weeks that are completed. And of course, you can decide to make the table the major part of the report, or maybe the chart itself, or maybe both. You can do comparisons, but it depends on what chart you're using. Technical comparisons are sometimes a little trickier to do in retention. Now, the first question you want to ask yourself here is, where are the major spikes? Where are the major drop-offs? This is kind of like a bit of an interesting retention curve because we can see the retention actually, drops to about 37% by basically week 1. So you can see there's actually quite a bit of drop-off from the start. Sometimes you see products where you may have high retention for the first few days and then it drops. In this case, it drops pretty quickly. But then it stabilizes at about 30%, maybe goes down a little bit to like 27%, and then it kind of spikes again in week 11. Kind of interesting. But again, this is sample data. But in your product, you just want to understand what is the general usage here. Are we seeing high spikes in, day 7, day 10, day 15? week 3, week 4, week 5, or is it a consistent decrease from the first week down into the 6th, 7th, 8th week? Now, high-level data is great to start, but there's actually an easy way to start to uncover hidden insights in your data. The first thing we want to do is to do some kind of filtering. So depending on what data you're passing to Mixpanel, you'll have different properties available here. You may have things at the event level. In this case, we have this DM cohort, which is kind of interesting. This may be something specific to the users themselves. We, of course, may have default properties in Mixpanel captures, like country. We may have city. We may have, let's go here. We may have some marketing sources. Let's see what we got. So we may have referring domain, some UTM data. So we may start to say, I really want to focus specifically on paid media users. So we go to organic source. We see we have Google Ads, we have Facebook, we have Instagram. Let's see what Google Ads looks like if we have any data. So now we kind of see the data compare for just Google Ads. So you can start to create standalone retention reports for the specific personas or use cases that you're particularly interested in. You may have also built cohorts in your Mixpanel data. So you may have that here. So you may have a cohort of high LTV users. You may have a cohort of enterprise users compared to SMBs, maybe a cohort by specific industries. Again, it all depends on what data you're collecting and what becomes available. You may, of course, have some computer traits, which may be kind of interesting, where you look at users who have sent 10 AI prompts from the moment they signed up compared to users who haven't. So all these things become available for filtering. And so we take high-level data, which gives us averages, which is not bad. It's a great starting point. But we start to diagnose, okay, what are the specific things that we're working on right now? Where are we driving traffic? Where are we putting dollars and effort? And how does that look when we compare it to our average? The final question you can start to ask at this step is to figure out how you compare to benchmarks. Naturally, some products have higher retention than others. Gaming apps, for example, have notoriously poor retention rates. You tend to lose a lot of users in the first few days. So if you're coming in with a gaming app and you're saying, hey, we are losing 80% of users within 7 days, should we be panicking? Maybe not. That may actually be in line with industry benchmarks. Now, you want to do better than the average, fair enough, but there's constraints here. If the industry average for retention on day 7 is only 20% of users, if you are at 20% or 25%, you're doing pretty good. Now, you may try and get it to 30%, 35%, fair enough, but you're probably never going to get it to 60% or 70%. So benchmarks, industry averages, whatever your peers are doing, those can give you an idea of where you stand right now and where you can actually make significant improvements if you put enough effort and time. Now, there's an adage in the data world: averages lie, segments don't. So let's move beyond filtering and start to see how we can start to break this data down to try and see interesting insights. So the next step, what we can do is actually do a breakdown of data. For example, we can take the UTM source, but instead of just filtering for a specific UTM source, we instead just actually break it all out by the different ones altogether. You remember we had quite a few things in our dropdown. In this case, we are putting all of them into a single chart and then trying to see which ones seem to do better. You can start to see that some of the data is actually a bit chaotic once you get to this point, which is why the breakdown may not be your first action, but you may start to say, you know what, if you look at week 7, it really looks like YouTube actually seems to have a much higher retention, 34% compared to that average of about 29, 30%. That's kind of interesting. Where is the YouTube traffic coming from? What are we doing on YouTube? Is it our own YouTube channel? Is it people who are making videos about us? Are we doing brand deals? And then we can start to see that perhaps, LinkedIn seems to have very poor retention actually, 25%. So perhaps LinkedIn users are not the kind of traffic we want to go after in any kind of significant campaign. So breakdowns start to kind of show us interesting data. Now, some of the numbers may become a little funky. You can see here that, we have the total profiles went from an individual number, what we had before, into specific numbers. You still have some specific numbers here. Just note that if you were to export this data, add up all the LinkedIn ones, add up all the Twitter ones, you may get slightly different numbers from the weekly breakdowns. Again, it's just the way the retention formula works behind the scenes with Mixpanel is a bit unusual, but the data is correct. And again, you're looking here for directional insights. So you may not say we had exactly 150 users from YouTube on week 8, whatever the number is, but it's giving you a directional sense of how YouTube users perform over multiple weeks or multiple months. Some other breakdowns you may want to explore here, you may have different account types. So you may have, again, SMBs, SMEs, and enterprise users. You may have free users versus paid users. You may have different industries you want to look after. You, of course, have all the market and performance notes like UTM source, UTM campaign. You may have web versus mobile users, which is a platform breakdown. I think Mixpanel does have a platform breakdown. Let's go see it. Technically, it has device, which you could use. Let's see what that gives us. So you get some information on device. This is actually quite a bit of devices, so you may need to do some work to consolidate this data. Operating system actually may be a better fit. Yeah, that kind of makes more sense. OX, yeah. So you have iPhone, Windows, and Linux. There may be some Android data you may need to diagnose here. So you can start to think of all your different segments. You're not going to have that many, maybe 3 to 5 potential segments. You can start to break apart retention to try to figure out why are some users retained higher versus others? What are some of the attributes that we need to emphasize or amplify. Now, for those of you who want to go deeper, I do have a few advanced tips you may find helpful. So we covered quite a few things. Now let's go back to the original formula. You can see there's actually a bunch of other things that we did not cover yet. So we have retention and we have frequency. Frequency, of course, is understanding how many users come back to your product. So you may, for example, look at the frequency of an event. In this case, you're not seeing event A and event B. You're actually just taking the AI prompt set. Let's look at that. Let's remove this so we can see just overall data. So this starts to tell you how often users are actually engaged in an event. For example, for the AI prompt sent on a weekly frequency, we can see that about 27% of users did it 2 days a week, and then 17% did it 3 days a week. And then we go down here, only about 0.77% of users actually did this event 6 days a week. This actually gives you more insights into how your retention frequency actually works. So weekly actually makes sense, I think, for this product. Daily probably wouldn't make sense. Monthly may be too long. And you may have goals. You may say, hey, we really want users to come back at least 3 times a week. So you can then start to see how this number changes over time using the frequency report. Let's go back to the retention. There are a couple things here. You can see that you have these options here, whether it's on or after, on before, or streak. So on is a default. You simply look at the interval. So what user actually completed an action on week 1, week 2, week 3, which is the frequency we are using in our example. Streak simply means how many users are actually performing the event multiple periods in a row. In this case, it'll be week 1, week 2, week 3, but you may have day 1, day 2, day 3. You can start to get a gauge as to how many users are actually coming back and using the product consistently, week in and week out. On or after can sometimes be seen as a more absolute form of retention, because you may have a user who did something on week 1, nothing on week 2, but then something on week 3. If you were to look at this chart, you may say, hey, you know what, how many users actually did something on week 1 and then actually came back and did it week 3 or week 4. So you get a little bit higher levels of retention. You can see our level here went up to 30% to about 85%. Is this necessarily true compared to what we saw before? Not really. It's just a different way of understanding retention. It just simply tells us how many of your users are actually doing something over the period, in this case, over the 3 months. Of all the users who signed up, how many are actually doing something over that 3-month period? And then on or before allows us to explore breakdowns. We can see not just the retention rate, which is what we've been using all this time. So you may do some kind of aggregation by a sum or an average. And then from that perspective, you get a little bit more built-in numbers for the retention. How much revenue has been collected over the last 3 months as we go along, and we aggregate revenue or price based on that. Finally, you can see here that we do have a bit of a flexibility. If you go back to on, we can see that we can do, each week, or perhaps we look at the monthly intervals while still keeping the weekly breakdown here, or combining it with a weekly breakdown. So just different ways of looking at retention. Now, if all of this is kind of complex, don't worry about it. Keep the default, look at your top level retention formula, and start to understand it. Retention is one of those reports that takes time to properly fill out. So you may need multiple months of data before you actually start to see useful insights or patterns, which kind of sucks, but it's just the nature of the report. And it may also be the nature of your product. If you're not a daily frequency kind of product, like a game app, you may simply need to wait some time before this report even becomes useful to you. The last question here for you to think about is what retention formula reflects the reality of your product? If you're starting to see how powerful retention reports can be, the next step is really to master Mixpanel as a whole. That's why I put together a video with everything you need to know about Mixpanel in 2025. Highly recommend you check out this video next as your way to level up your understanding of Mixpanel and, of course, understand how to grow your product. My name is Ruben, and I'll see you in the next video.